Welcome all of you to this online workshop. Today in this workshop, you will learn how to make money in trading using Dynamic Live. And earlier in the webinar, you must have seen the different benefits of having Dynamic Live, and you must have also seen there are some very unique intelligence at work in this Dynamic Live, which always make sure that you get the right entry and right exit in any given market conditions. Having said that, today in this session, we will learn things in a bit more detail, because when you sit there to start your trading, now what are you supposed to do? What are the points that you're supposed to remember? These are all the things that we will discuss today. Now, once you have subscribed for Dynamic Live, once it is installed and activated, when you open it, this is how it is going to look. And whichever script or stock or index that you have selected, you will be able to see two different charts. One on the right side, we call it as the intra-week chart, and the one on the left side, we call it as the intraday 3 chart. Got it? And in both these charts, you can see there is this line here. Now, this line, we call it as a long signal. We call it as long signal. Now, if you are looking at the long signal in intra-week chart, we call it as intra-week long signal. If you are looking at long signal in intraday chart, then we call it as intraday 3 long signal, or ID3 long signal in short. So this is how you understand it. Now, before we start understanding the method on how to trade, when to enter, when to exit, there are three basic things that you have to understand, and one of it is this long signal has a character. It can change its color from red to green, from green to red. You can see here, green to red, from red to green. Whenever it turns green, it means it is telling you to buy. It says that the trend is up. Whenever it turns red, it means it is telling you to sell, and it says that the price trend is down. So just by looking at the color of long signal, you will be able to understand the trend of the price movement here. And after that, the second most important thing here is the zigzag cautions. You can see here there is a symbol at the bottom here, the green colored symbol. Now we call that as a zigzag caution. Now whenever a zigzag caution appears, it means the price can reverse. So the temporary price reversals are identified by these zigzag cautions. If the same zigzag appears on top, it will be red in color. But then you may be thinking, now there seems to be lot many symbols. Now which symbol do we consider to be a zigzag? Now for that, it is an easy job. Whenever a symbol appears either in intraday 3 or in intra-week, any symbol appears, you can immediately come look at this reason here. In the reason, it will be very clearly mentioned as ID3 zigzag or intra-week zigzag. So that confirms whether the symbol is a zigzag or not. So that is a zigzag. And then the third and last thing here is long signal edge point. You can see here the price was going up, and as it started going up, at some point it started coming down, and as it came down, it came when it came closer to the long signal, many times it touches the long signal, sometimes it comes closer to the long signal. Now these are the points, we call them as long signal edge points. It can happen in intra-week or even in intraday 3. So whenever there is a long signal edge point, now how do you know that? For that, you can simply come look at this reason here. In the reason, it will be very clearly mentioned as intra-week long signal edge. So as of now, it is written as intra-week long signal edge. It is referring to this. And even if in case you find the edge point in intraday 3, then it will be written as ID3 long signal edge. Now you can see here today, just before the market closes, the price started going up. And as it started going up, it has moved very close to the long signal in intraday 3. So there are chances tomorrow morning, in the reason very clearly it may be written as ID3 long signal edge. So whenever the price comes closer to the edge point, there are chances it can reverse. Okay, so the long signal edge points also identifies the temporary price reversals. So these are the three basic things that you had to understand. But then as far as trading is concerned, as it is told in the webinar, it is a matter of just 1, 2, 3 easy steps that you have to go through. The first step being to select your favorite stock or index by clicking on this favorites. And once you have done that, the second step is to come look at what this action information is telling you to do. And whatever it tells you to do, based on that, simply place the orders and start making money. So in this action information, there are some very clear instructions that you will come across. That is, if the price is likely to increase, then it will be written as buy call option now. It means buy a call option. Later, it will be written as hold call option. So hold the call option that you have bought. And at some point, it will be written as exit call option now. So when it says exit, then exit the call option that you have bought. Similarly, when the price is likely to decrease, then it will be written as buy put option now. And later, it will tell you to hold put option. And finally, it may tell you to exit put option now. Got it? So these are the very clear instructions that you will come across. So when to enter, when to exit, it will automatically tell you to do that. But then whenever it tells you to buy a call option or to buy a put option, there's one more important thing that you have to learn to do, and that is to select the right strike price. But today, dynamic live intelligence will automatically identify the right strike price for you. So whenever it is written here to buy a call option, then you can come look at this pyramid pointing upward, pick one number out of these three, that is your right strike price. Whenever it is written as buy put option now, then you can come look at this pyramid pointing downward, pick one number out of these three. But then which is the one that we are supposed to pick out of these three? When that is the question, you have to understand when you're trading in any index or in any stocks, we have monthly contracts to trade in options. So these are the option contracts with 1 month validity. It expires on the last Thursday of every month. So since it has a 1 month validity, you have 1 month duration in your hand. So you can split that month into three parts. The first part you can call it as the beginning of the month. The second part you can call it as the middle of the month. The third part you can call it as the end of the month. So in the beginning of the month, if you get any trading opportunity, you can trade OTM strike price in the beginning of the month. And at the middle of the month, if you get any trades, then you can trade ATM strike price. And at the end of the month, if you get any trades, then you can trade the ITM strike price. So this is how you select the right strike price. And when it comes to trading in index options like Nifty and Bank Nifty, along with the monthly contracts, you also have the weekly contracts available for trading. So if you want to trade in weekly contracts, understand this very carefully. If you want to trade peacefully without any confusion, without panicking anywhere, then it is better you trade only the ITM strike price throughout the week. Okay. Now over a period of experience later, you will learn how to get into ATM or OTM, but then initially you can stick on to this ITM strike price. So all that you're supposed to do here is whenever the action tells you to buy a call option or to buy a put option, just select one strike price out of the three best and then just go ahead and do the trade. Now, once you have done the trade, there is one more additional thing, once you have done the trade, you are supposed to hold on to the position until it is very clearly written as exit call option now or exit put option now. Until then, just hold it. Don't panic anywhere. Just hold on to it. Nothing will happen. You will definitely end up with profits when you follow it mechanically. But then in this process, there is one additional thing that you have to do, and that is you can see here in the intra-week chart, there are many symbols that you can see on top or even at the bottom. You will come across these symbols. Now whenever these symbols appears, now these symbols could be a dynamic system caution or a DMBOTS, but whatever it is, any symbol appears, it means secure your profits. Now how to secure your profits? Let me give you a small example here. Now let us assume that at this point it had told buy call option now. So you would have selected a strike price. Let's say you selected a 20,000 strike price. You bought a call option at 100 rupees premium. Now after buying the call option, the price of Bank Nifty started moving up. As it starts moving up, right on top there is a symbol that is appearing. It means you are supposed to secure your profits. So how to secure your profits? So for that, look at the call option that you have already bought. When you bought at 100, maybe now currently it is trading at 250, let's assume. So how to secure your profit? First thing, sell the call option that you have bought. Exit it. So exit it at 250, the current market price. So you bought at 100, you sold at 250, you gained 150 points profit, and your capital is also back. But at the same time, out of this profit, 150 points, go buy another call option with a different strike price, probably a 21,000 strike price, let us say at a 50 rupees premium. So out of 150 points gain, you are reinvesting 50 points and 100 points is still there in your hand. Now this 100 points is a secured and guaranteed profit. You have reinvested part of your profit. Now, if the price starts reversing completely, the worst thing that can happen is the 50 rupees premium can become zero. Even if it becomes zero, there is nothing to bother because you have already secured profit and this trade is not a minus trade for you. But instead of coming down, if the price starts increasing, then what will happen is that 50 rupees premium will further increase to 100 rupees, 200 or beyond, so that you will make more profits. Okay, so time and again you must keep shifting over to secure your profits, and do it whenever any symbol appears in the intra-week chart. And remember, if these symbols now this process of securing your profit, we call it as a shift over. And if these symbols appear on an expiry date or 1 day before the expiry date, then shift over to the next contract directly. Don't shift over into the same contract, shift over to the next contract. So this is how you secure your profits. So the action tells you to do a trade, get into the trade, any symbol appears, secure your profits. Now after securing your profit, wait until it very clearly tells you to exit call option now or exit put option now. Then you can finally exit your completed trade. Got it? So this is how easily you can trade. This is a very easy process. Anyone and every one of you can implement this. Now, first decide your capital. Based on your capital, select a quality stock or an index and trade the same script for one entire month. Now, that is the easiest way to trade rather than trading in multiple scripts. Now, and implement it for one entire month. And mechanically implemented, when you implement it for one entire month, then we expect you to earn a minimum of 10 to 15% returns at least per month. This much at least can definitely be expected. There are many months where it has given more returns, but then this is the minimum at least you can expect. But then when you are implementing it for one entire month, during the month you will come across lot many trades. In all these trades you will see results like gain, gain, minus, minus, gain, gain, minus, 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 gain, gain. Or it may start off like minus, 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 gain, gain, minus, minus, gain, 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 gain. Whatever happens, however it starts or ends, just make sure that you blindly implement it as it is told. As long as you do that, you will eventually end up with the minimum of 10 to 15% returns out there. But then it is also known that when you see a couple of minus trades, there are traders who panic, who stop trading, who change the concept. They try to do something different now. Now when you try when you try different, when you keep doing trial and error, one or the other way, you will end up winding up the whole capital. So the right way to deal with this is to follow some discipline, and we call this discipline as money management. Now, how to do money management? First, decide what is your capital. Whatever is your capital, utilize only 10% of your capital per trade. So at this point in time, I told you there was an example where I told you we bought a call option at 100 rupees premium. So one lot of Bank Nifty is 20 units. So 20 into 100 is 2000 rupees is the investment required. Let us say I have a lakh rupees capital in my hand. So I will utilize 10% of this capital. So that is 10,000 rupees. So when I want to allocate 10,000 rupees per lot, 2,000 rupees is required. So with the 10,000, I will be able to do 5 lots. I will be able to trade 5 lots. So this is how you can go ahead and do the trade. Okay, so as long as you follow this discipline, you will definitely end up with the end result. When you don't follow the discipline, then one or the other way, we have seen people who panic and they stop. Okay, but then once you start implementing it over a period of time, you will observe that earning 10 to 15% returns has now become a habit. Now when that becomes a habit, you will start thinking, is there anything more that we can do to increase our returns? In such a case, let me tell you, using dynamic live, one can trade in multiple ways to earn some huge returns. It is actually designed for something bigger. But then in this session, we will discuss only about the Dynamic method level 2, and for that we will discuss just 2 more additional steps which can help you enhance your returns. So what are these steps? Let us see. So the second step here is, it is very similar to what we discussed in the first step. Whatever we discussed just now, all that will be implemented here. But then whenever the action tells you to buy a call option or to buy a put option, before you do the trade, you just have to check intraday 3 long signal and intra-week long signal. Check these two. See what they both are doing. So let me give you an example. At this point in time, earlier, day before yesterday, in the action, it was very clearly written as buy call option now. So when it said buy call option now, before we did the trade, we checked intraday 3 long signal, we checked intra-week long signal. They both were green in color. If they both are green in color, it means they both are telling you to buy. It means they both are telling you that the trend is up. So in an uptrend, if you're planning to buy a call option, then that is the right way to trade. That is the best way to trade. No thinking, no guessing. Just go ahead and do the trade. The success rate on these kind of trades is very, very high. Okay, so you can just go ahead and do the trade. But then there are cases where at this point in time, it said buy put option now. So when it said buy put option now, we checked intraday 3 long signal, it was green in color. Intra-week long signal, that was also green in color. So both of these long signals are saying that the trend is up. In an uptrend, you are planning to buy a put option. Now you are going against the trend, isn't it? Now this is a mismatch, isn't it? Right? Similarly, you can see this particular example at this point in time. It was very clearly written yesterday as buy put option now. So when it said buy put option now, we checked intraday 3 long signal, it was red in color, so it is supporting. But then we checked the intra-week long signal, it was still green in color, it is not supporting. So even if any one of the long signal is not supporting, then it means there is a mismatch. So whenever there is a mismatch, before you do the trade, you must go check some other script to take a decision. So if you're trading in Bank Nifty, go check what is happening in Nifty. Got it? So when you're trading in one script, going and checking some other script, this process we call it as Tenkai signals. We call this process as Tenkai signals, Tenkai, Tenkai signal. Now, if you're trading in Bank Nifty, then Nifty is your Tenkai signal. Go check Nifty. Similarly, if you're trading in Nifty, then Bank Nifty will be your Tenkai signal. So what are you going to check? When Bank Nifty at this point said buy put option now, at the same time, go check in Nifty what is happening in Nifty. Now, what will you check in Nifty? There are only two things that you are supposed to check in the Tenkai signal. That is there any zigzag caution, zigzag symbol at the bottom in Nifty? Or is there any long signal edge point in Nifty at the same time? Either in intraday 3 or in intra-week, it doesn't matter. If it is there, if any one of these two is there, if a zigzag is there or even if a long signal edge point is there at the same time, then avoid the trade. Don't do this trade. Don't trade Bank Nifty. Got it? But then when it said buy put option now, yesterday it was very clearly written. We saw that intraday 3 was supporting, intra-week did not support. There is a mismatch. So we knew that we had to check the Tenkai signal. We went and checked the Nifty. In Nifty, we saw that there was no zigzag, there was no edge point, nothing was there. Since there was nothing, then we went ahead, we did the trade. I happened to trade a 20,000 strike price put option, bought at around 110 rupees premium. But as the price slightly came down and within the next half an hour, there was an intra-week long signal edge point and it said exit put option now. So by the time I exited, I happened to exit it at 122 rupees premium. So very small profit, but still I just followed it. And when it told me to exit, I simply exited the trade and now I'm waiting for the next trading opportunity. Got it? So this is all that you are going to do in the second step. Let me revise it once again. When the action tells you to buy a call option or to buy a put option, check what intraday 3 long and intra-week long signal is telling you to do. Right? If they both are supporting, then go ahead and do the trade. If they both are not supporting, or even if any one of these two is not supporting, then check the Tenkai signal because there is a mismatch. Remember, we will check the Tenkai signal only if there is a mismatch. Right? So why do we check the Tenkai signal? It is to decide whether to do this trade or not to do this trade. What do we check in Tenkai signal? We check is there any zigzag or edge point at the same time. If it is there, then we will avoid the trade. If it is not there, then we will go ahead and do the trade. Got it? So this is all that you're supposed to do in the second step. If you can implement the second step consistently for one entire month, in comparison to the first step, you will see that there are many trades you will end up avoiding during the whole month. And those trades which you have avoided, eventually they would have ended up being a minus trade, but anyways you have avoided. So your number of minus trades have reduced. So compared to the first step, the second step will help you reduce the number of minus trade. When that happens, your returns will increase, your balance will increase, your profits will increase. So if you can implement the second step continuously for one entire month, we expect you to earn a minimum of 20 to 25% returns at least per month. Got it? So this is about the second step. Now, if you have understood the second step, then third step is very, very easy because all that we have done on the second step, the same thing we are going to do in the third step. But only thing, one small addition is that, very small addition. What is that we do in the third step? Whenever the action tells us to buy a call option or to buy a put option, we check the intraday 3 long, we check intra-week long, we will check one more thing, and that is dynamic system. The third one that we check is dynamic system. Now, what is dynamic system? Dynamic system is another intelligent platform which will be installed into your computer if you have subscribed for this dynamic live. Dynamic system is being given free for a limited period of time based on the plan that you have opted for. And dynamic system is used to do positional trading in futures and options in any stocks or index. Now, how to do positional trading using dynamic system? There is a very clearly defined method We call that method as the level 2 trading method. We call it as the level 2 trading method. Now, what is the method? All those points are very clearly explained in the training video. Where to find the training video, I will show you at the end of the session. Right? Now, once you watch the video, you will be able to very clearly understand how to do positional trading using dynamic system. But anyways, as per dynamic system level 2 trading method, what is the current position? Are you supposed to be holding a long position, or are you supposed to be holding a short position? This is what you are supposed to check. So yesterday at this point in time, it said buy put option now. So when it said buy put option now, we checked, when it said buy put option now, we checked intraday 3 long. It was red in color. It was supporting. We checked intra-week long signal. It was green in color. It was not supporting. We checked the dynamic system level 2 trading method. As per that, we were supposed to be holding a long position. So that is also not supporting, because here it is telling you to buy a put option. So here, since both of them, out of three, two of them are not supporting. In many cases, out of three, one is not supporting. It doesn't matter. Even if any one does not support, it means there is a mismatch. If there is a mismatch, go check the Tenkai signal. Same procedure. Check the Tenkai signal. See, is there any zigzag or edge point? If it is there, don't do the trade. If it is not there, then go ahead and do the trade. Got it? So yesterday we checked the Tenkai signal. There was no zigzag or edge point. That is the reason we went ahead and we did the trade even when there was a mismatch. Got it? So this is all that you do in the third step. Very easy to follow. All that you are supposed to do here is, remember, I'll put it in a very organized way. Whenever the action tells you to buy a call option or to buy a put option, check intraday 3 long, check intra-week long, check dynamic system level 2 trading method. First step. Okay, and in this, if all three are supporting, then go ahead, simply do the trade. Nothing to worry. But if any one of these three is not supporting, if any one of these three is not supporting, if there is a mismatch, then check the Tenkai signal. Why do we check the Tenkai signal? It is to decide whether to do this trade or not to do this trade. What do we check in Tenkai signal? We see, is there any zigzag or edge point? If it is there, then don't do this trade, avoid this trade. If it is not there, then go ahead and do the trade, even if there is a mismatch. Got it? So this is all that you're going to do in the third step. And if you can implement this third step in comparison to the first and second step, third step will help reduce the total number of minus trade in a big way. And then you will see many months in a given year that there will be months where there is a literally zero minus trade as per the third step. And if you can implement it consistently, we expect you to earn a minimum of 30 to 40% returns per month. And I have also been sharing my trading details for the last couple of months. The first month it gave me almost 70% returns. The second month it gave me almost 40% returns. It should have been 50, but then I happened to unfortunately miss a trade, but or else it would have been 50%. But anyways, practically I have achieved only 40% return in the second month. One way or the other, minimum 30 to 40% returns can be achieved very easily if you can implement this third step. Got it? So in order to fulfill this third step, there is one more last point that I have to convey. For that, I must open dynamic system. Let me show you that. And in the meantime, if any one of you has any questions or doubts till now, you can ask me now. If there are no doubts, you can also text saying that there are no doubts. So this dynamic system, I have opened a daily chart of Nifty, and in Nifty you can see these are the price movements. This is the price movement, every day's price movement, and along with the price movement there are three lines you can see here. One is a black line, we call it as a speed trend. The other is a green line, we call it as a mid trend. The third is a purple line, we call it as a long trend. So whenever the price is trading below all three trends, we say that the trend is the price is in a clear downtrend. Similarly, when the price is trading above all three lines, it means it is in a clear uptrend. Okay, but then there are cases where the price is trading between the three lines. Can you see this? The price is trading between the three lines. So whenever the price is trading between the three lines, now these are the situations we call it as in between trends. Okay, so whenever whichever stock that you are trading or index that you are trading, and if it is an in between trend as per dynamic system daily chart, then for all the trades that you get in this action information, check the Tenkai signal. If your stock or index is an in between trend, then check the Tenkai signal for all the trade. Got it? So this is the last point that I had to convey. So that this completes the third step. And you know, if you can implement this consistently, then the result is yours and you will start achieving consistent returns month after month. Now one Mr. Karthik Jaisimha has asked kindly open Nifty chart also for comparison. Definitely Mr. Jaisimha. Let me show you this. So this is the point that I was explaining when it said buy put option. It was very clearly written. Now what was the date and time? It was on 9th June at around 14:30, that is 2:30 in the afternoon. At the same time, let us go check what is happening in Nifty, isn't it? 9th June at 14:30 in Nifty. So you can see here, this is 9th June 14:30 in Nifty. So at the bottom, there is no zigzag symbol. Nothing is there. You can see here, there is no symbol at the bottom. The price is not touching any long signal at the bottom there. And at the same time, even in intra-week, if you see, let me zoom in a bit. Even in intra-week, the price was somewhere at this point when it said buy put option now. So there was no zigzag or edge point even in intra-week. So we went ahead, we did the trade. After we took the trade, the price came down and then it touched the long signal edge point. Got it? Clear, Mr. Jaisimha? Karthik Jaisimha. How to, Mr. Deepak has a question. How to check Tenkai signal? Will it mention zigzag, etc.? At the same time when we get action? Yes, definitely. When you check the Tenkai signal, if there is a zigzag symbol, then a symbol, colored, green colored symbol at the bottom or any red colored symbol on top will appear. But anyways, when a symbol appears either in intraday 3 or in intra-week, just check what is written in the reason. Very clearly it will be mentioned as ID3 zigzag or intra-week zigzag. Got it? Similarly, if it reaches any edge point, then you can see here in the reason it is very clearly written as intra-week long signal edge point. So all those things will be very clearly mentioned in the reason. So that is the reason I told you your job has been made very easy, provided you check the reason at those point in times. So that will be good enough. Mr. Raghav, thank you so much for your guidelines. I have position in RBL Bank. Till today, I didn't share my trading details. Today, I did to say the power of dynamic system level 2 method. Sure, Mr. Raga, we are so very happy to see that you have achieved some good success with this dynamic system, and you know that I'm always there, day in and day out, to support not only you, all the dynamic members. We will continue to do that, and all these efforts are to make sure that each and every member can achieve the end result, and that is to make only profits, nothing else, right? So this is all about today's session, gentlemen. If anyone has any other questions or doubts, you can ask me now. In the meantime, if anyone wants to learn about this dynamic system and others, there are some reference training videos in the members area. Where to find them? Let me show you. For that, you have to log into our official website, that is dynamiclive.in. So this is our official website. in this website, you can see in the menu, it is written as members area. Just click on it. Once you click on the members area, now it will ask you for your email ID and password. Once your dynamic live is installed and activated, you will be given an email, password to log into this members area. Remember, you will get a lifetime access to this members area. Once you have logged in the menu, it is you will find this training 2020. Just click on it. And these are all the reference training videos. If anyone wants to start learning about dynamic system from scratch, then I would suggest you to first watch this dynamic system basic navigation video, wherein you will learn how to open chart, how to open a report, what is the inside dynamic system. All the basic navigation related things will be explained there. And after that, just scroll it down a bit. And when you do that, now this is the level 2 trading method that I was talking about, dynamic system level 2 trading method. Now this is a video that you have to watch, but before you watch the level 2 trading method, watch the level 1 trading method. So understanding level 2 trading method becomes very easy if you can do that. And each of these videos is hardly for 20-25 minutes duration, and it is already there in 4 different languages to comfort you. Watch it at your leisure time, and you will be able to thoroughly understand how to use dynamic system. And after that, you can scroll it down a bit further. If any one of you is a beginner to options, you can watch this video for your reference to understand more about options. And then if you can scroll it down further, there is this options trading and money management for beginners. I request all of you to watch this, just because in this video it is explained how to select the right strike price, and then how to shift over to secure your profits, and how to do money management. All these things are very clearly explained in this video. Do watch it at your leisure time. And then the last 2 videos. Now today we have discussed the first step, which can fetch you a minimum of 10 to 15% returns. Now that method has been explained very clearly in this video. And then the second and third step that we discussed today has been explained in this last video, Dominant method and Tenkai signals. Watch it, at least the last one, definitely watch it. And we saw that if you're trading in Nifty, then Bank Nifty is your Tenkai signal. Similarly, if you're trading in Bank Nifty, then Nifty will be your Tenkai signal. But if you're trading in any stock, then which is your Tenkai signal, where to find it, how to know about it, all these details are very clearly explained in this video. Do watch it at your leisure time. Got it? So this is all about today's session, gentlemen. If you have any other questions or doubts, you can ask me now. If there are no doubts, then please text me saying that there are no doubts. All right. Thank you, Mr. Raghava, for your comments. Now, thank you. Looks like there are no questions or doubts. So, gentlemen, thank you all for joining today's session. Wish you all a happy trading. Wish you all a very good evening. See you on the other side in the pre-market session tomorrow morning. Until then, good evening to all of you. And thanks again for joining this session.